My name's Michael Hawksley. I will be presenting I'll be coordinating the webinar today. Our presenters are Susanna Hardy and Ragu Bhargava. A few quick housekeeping points. The webinar should last 30 minutes. We will have 4 polls during the webinar, and there will be a questions box, so please do use that. There's also the chat box as well. Once the webinar is finished, we will have a very brief questionnaire at the end, and everyone will be sent a copy of the webinar on Friday. Just a very quick introduction on IBT Partners. IBT Partners provides online business services for companies across the globe. Our offices are in the UK, Germany, and France. We are a private company, and as I say, our core activities are international business development support using online services. Global Upside, a few words on Global Upside. They have a global presence providing end-to-end finances, HR, tax, and compliance to some of the world's leading companies with with services and support in 90 countries. Ragu is our guest speaker today. He's the Chief Executive Officer of Global Upside and has experience in supporting clients and building the alliances and really driving Global Upside forward. Susanna, I'm going to hand over to you.
Thank you very much, and welcome everybody. Again, apologies about the lack of audio at the beginning, but hopefully everything is sorted. So without further ado, we're just going to talk through some of the contents we'll be looking at today. I think it's really fantastic. We've got Ragu here to talk to us about his experience about expanding your presence in Europe, both from the key considerations and right down to sort of expect the unexpected. And as Michael was saying, we would really encourage you to put some questions into the question box or and participate like that, and I'm sure Ragu will spend some time at the end fielding some of the questions. I'm going to give a brief introduction first about some of the international world that we see from our perspective, very much an online perspective, and that is very much also in sync with what Global Upside and Ragu and his team have as well. So for my first slide, I just wanted to show this picture here. And there's a lot on this slide, and as Michael said, you will be all getting a copy of this, and the webinar will be online in about 2 days' time, so you can just sit back, relax, and just listen and don't have to take notes. But what interested me here was just this McKinsey report that came out in February of this year, really discussing how data flow seems to be really taking, is now taking off hugely, continuing to take off, and taking the place of or driving some of the international trade. A lot of people have been worried and concerned in the last, since 2008, about increase of protectionism. Is this the end of globalization? There's an increasing sort of walls going up around countries. What's going to happen to global trade? So we were very interested to see that, in fact, for them, it's not so much the end of globalization, but perhaps there's a new element that we all have to take into account, which are digital flows. And this slide here shows you some of those digital flows. And 15 years ago, nobody talked about digital flows. And these really represent the coming of age, in a sense, of the Internet and how this is now affecting trade. And the report estimates that digital flows have now a larger impact on GDP than the trade in goods. Both of those pictures show the strongest link between Europe and the United States, both for the global flow of data and communication, which is by far the largest link is between the United States and Europe, and in terms of bandwidth capacity. Again, the largest flow is between Europe and the United States. So that's why we thought was particularly interesting. So, it's up in total, cross-border bandwidth is up 45% in the last 10 years, and it's expected to go up another 9 times. So really, really amazing. And this brings us then to the next slide, which I really wanted to say, Michael began by talking about localized websites, and that's what we do, and we're often asked the very simple question of what is a localized website? And for us, I want to explain just very briefly, a localized website is a website that interacts in a local market efficiently and optimally, so that it's not just a translated website. It's a website that's embedded in a local culture and that is fit for purpose for companies to use. So that's really the core. It's much more than just translation. It's right down to the metadata and the concept of the website. And I guess it really stems from a couple of sort of key elements on the web. And I just wanted to sort of, I'm sure you all know this, but I think it's worth remembering some of these things. The first is that Google, and all the search engines for that matter, cater to the individual markets. So even if it's in English, for example, I'm sitting in England today, and google.co.uk, which is what I have in the UK, is very different from google.com in the US. So even if the language is the same, Google caters it to a British audience. And it goes without saying then that if Google are doing it per market, then your search engine optimization is also specific to each country. So you can be optimized, your website can be optimized in one country, in, for example, your home country, but it does not work efficiently in other markets. And I guess the third major point is that social media is now an absolutely must-have for any corporation, and especially for any exporter for that. And so I just wanted to sort of bring those up to your attention. Michael, do we have a poll now?
We do. I'll launch the first poll. Okay. Do you already have a localized website for your key export markets? That is the question that we have on the first poll. I'm seeing quite a few answers coming in. We're seeing 40% saying no, 30%, 38% saying thinking about it, 17% saying yes. I will give you a few more moments. Would anyone else like to vote? Okay, last count is 10 yes in all the important markets, 13% yes but only in a few, 37% thinking about it, and 40% no. So thank you for that. I will close the poll.
Very interesting. Thank you, Michael. Thank you for that. I'm going to leave you with this slide here. Very sort of emblematic slide. It just really gets the key numbers across, again, between the United States and Europe. These two trading blocs are each other's largest partners, largest foreign affiliate jobs, and largest foreign direct investment. So FDI, jobs, and ordinary commerce are all the single largest partners between the United States and Europe. And I think that's a great introduction for Ragu. Ragu, if you're there.
Yes, I'm here.
Great.
Thank you, Susanna. And $2.7 billion per day, that's a lot of transactions between the two regions, one country and one region. And US is a very big market for almost everybody in the world, and there's a lot of business globally that comes our way, a lot of companies that come our way, but then also US companies are expanding, and today we focused on the European expansion. And towards the end of the call today, there's a poll about other geographies, so we can cater to those geographies in a future webinar. But what we're going to cover today in terms of expansion is location. Where should you go? How can you get set up there? What kind of activities do you want to do in those local geographies? And how do you hire and retain people? And then some of the other back office considerations and management considerations that you need to worry about. So talking about the location and setup, Susanna, can you advance to the next slide, please? So before we actually decide about the where to, the question becomes is what are you trying to achieve? Is this really you're trying to get into a foreign country on a more because you see an opportunity and you have a reason to be present there on a long-term basis, or is this some kind of an experiment you're conducting to see, hey, if I can get $1 million of business this year, then I will establish myself. And so that to a certain extent determines your approach to going into a foreign country, but and part of that is also like where, because people go into countries like Netherlands or Ireland or Switzerland from a tax perspective, which you may not need to really establish a physical presence or hire people there. There are other ways to achieve a nexus for tax purposes. But if you're really trying to generate revenue, which should be the reason for growth, then you kind of have to think about which is your best market, where should you hire people, that kind of stuff, and what kind of establishment. So rep office is obviously the exploratory type entity where you're not allowed to sell in that country. You can have somebody on the boots on the ground, just looking at the market, evaluating opportunities, that kind of stuff. Most people go in as a branch or a subsidiary. A branch is obviously a smaller footprint from a legal perspective. Some of those requirements for subsidiary or branch are the same. For example, you have to file an annual income tax return. Obviously, there is a risk mitigation issue in a subsidiary where if there is anything that goes wrong in a particular country and you get sued, then the liability stops at the local subsidiary level. If it's a branch, then obviously if something goes wrong in the similar situation, they would come after the U.S. parent or the parent company. So generally speaking, if you have visibility into your opportunities and things like that in that country, we recommend setting up a subsidiary, limiting your exposure, and keep in mind whether you have a rep office or a branch office or a subsidiary, you are creating permanent establishment or PE. And to the extent you hire a contractor, which a lot of companies say, oh, we'll just hire that individual in that foreign country as a contractor. Well, remember, you just created PE even though this person works like a contractor for you, because most countries outside the U.S. don't recognize the difference, and in most countries, people aren't looking at themselves as a contractor to their customer client. They're looking at it, okay, this is just a way to get engaged, but I'm really your employee. I work for you full time. And so those rules that apply in the U.S., contractor versus employee, apply everywhere in the world. Obviously, location-wise, there is the Western Europe, more developed countries, the Eastern Europe, a little bit less developed, but cheaper labor force. A lot of those countries are actually having a lot of traction R&D efforts, like Ukraine, Romania, Serbia, Czech Republic. There's a lot of talent available there. You may also want to think about regional centers. A little bit of it is the issue of tax structure. A little bit of it is logistics setup, or ease of doing business across Europe from, for example, Ireland. And a lot of people, including myself in my prior life, I've set up a service center in Ireland to service all of EMEA, as an example. And Susanna, can we move on to the next one, please? The one thing that is very important from a European, from a rest of the world perspective, is company law compliance. So for example, in the U.S., when you form a company, you register it with, say, Delaware. All you need is a registered agent that charges you, I don't know, $200, $300, $400 a year, and they provide you an office address in the state of Delaware, which is required by law. But when you go to a foreign country, there's a lot more compliance requirements, for example, resident directors. So you need somebody who lives in that country to be a director of the company. And by the way, these directors have a lot of authority and a lot of power. They obviously have a lot of risk associated with all of this. And when we get to that, I'll give you some examples of that. But resident directors, a registered office, that's the same thing as the U.S. And sometimes when you go to countries like Canada, you may need multiple registered offices because of the different provinces, but most European countries are small enough where one registered office just works for the rest of the country, for the whole country. I briefly touched base on the substance over form issue, the tax structure where you need to keep local set of books, because even though you are registered, you really do not, the government doesn't think of it as a presence till you keep local set of books, have resident directors, have some of those things that actually go to prove that yes, you are present here. Some of these countries require like an annual board meeting, shareholders meeting to happen there, which means somebody from the US needs to fly over to, let's say, Netherlands for an in-person meeting. Now, if you travel enough, then there's no big deal. You can make a stop in Amsterdam or someplace like that. But if you don't, then you have those issues where a director is having to fly just for a 1-hour meeting or something like that. There's requirements in many countries around data protection registrations, because obviously we are maintaining a lot of, every single company in the world is maintaining a lot of information about their clients, their vendors, their customers, and above all their employees, and which also leads into data privacy issues, because in the US we are not used to any restrictions per se, other than obviously disclosure on the internet or something like that. But in most countries, in Europe, you can't even take the information of an employee in, say, France and transmit it without their employee's permission to the US, even though it's the same ultimate parent that is employing this employee, but the rules don't allow you to do that. So you have to worry about data privacy and how do you make sure that you have good walls created everywhere to prevent the free flow of information, and how do people have access to what they need access to run the business. At least for the private companies, most times there is no audit requirement in the US, but almost all countries in Europe require what is called a statutory audit. So it is not a financial audit like what we see the Big Four doing. It is more a statutory audit, and it has to comply with some of the statute requirements. So you have to disclose. The opinion isn't your 3-paragraph opinion you're used to seeing. It may be a couple pages long. You may have things listed, exceptions listed that you never thought would ever make it to an audit opinion. But that's an annual requirement. And in addition to an income tax return, there is the requirement of the annual report. So a report that has to be prepared about ownership information and things like that, financial information, and that has to be filed with, for example, in UK with the company's house, inland revenue. And a lot of this information is actually public information. So you can go online and you can look it up as to who owns the company and what their financials look like for the last year and stuff. And obviously there are timelines to do this. Generally speaking, for example, in UK, the annual report is due 9 months after your year end. So those are some of the things that you need to worry about from a company law perspective. Obviously, if you're going to go into a new country, you're going to have to worry about hiring people. So the slide talks about all of the HR and employment matters.
Before we go on, Ragu, could we possibly have a poll now?
Fine.
Yes, absolutely.
Start the poll. So here comes our second poll. What is your biggest HR challenge? We have European law, statutory and supplementary benefits, attracting the right talent, multi-currency payroll, and you don't know. Okay. We're getting the results coming through. I'll give you a moment or two a bit longer just to answer them. Okay, it looks like the numbers are settling down. We have 30%, 31% saying employment law, 13% saying statutory and supplementary benefits, 24% attracting the right talent, 15% multi-country payroll, and 15% don't know. Okay, I think those are the last numbers. I will close the poll here.
Yeah, so that's an interesting survey where obviously, you know, some of the things that we see are coming up, and to a certain extent, obviously, people are, if you don't have operations, or if you have one country operation, you with a one or two person, you may not have run into some of these issues. Susanna, can we go to the next slide, please? So from an HR employment perspective, the things you have to worry about is who are you going to hire there? Are you going to hire local nationals to work for you? Are you going to take somebody from the U.S. and have them go establish the office, hire the people, be there for a year or two, and those kind of things. So those people are generally referred to as expats or expatriates, and with those, you know, if you're sending people overseas to a foreign country, just like coming into the U.S., you have visa issues, and beyond the visa issues, because as you may be aware of, U.S. government says, hey, look, you're going to be taxed on your global income. So an employee who's working a U.S. employee who's working for the next 2 years in Netherlands will be subject to the Dutch tax system, local system, income taxes and stuff. And they are also subject to tax here in the U.S., which means they could be paying 70–80% tax, which means they have no income left. So then the issues of global mobility come in, where you are having to equalize tax and stuff. And a lot of times, by the time you consider all of the issues around moving expenses and tax equalization and contractual arrangements and stuff, your cost of doing business for sending somebody from here to overseas can be as much as 3 to 5x what their compensation was here in the U.S. Now, obviously, there are business reasons to do it. Your product is complicated, or your services offerings are complicated. You do need to have somebody from the U.S. go there to establish the right structure, hire the right people, and to the extent that applies, that applies. You got to absorb that cost. But then you have you may be able to build a local model based on local hires. As you think about hiring people in any country, you got to worry about the employment laws of that country and related contracts. So, and we'll talk about employment law in a minute a little bit more. So then thank you. And all of those hiring processes I'll talk about on the next slide a little bit more. But then you also have to worry about salary benchmarking. Here in the U.S., we may know that you know, a country manager or a head of sales, how much should we be paying them? But how do you figure all of that stuff out in that foreign location? How do you figure out what kind of stock options and things and stuff? You have payroll issues. How do you make payroll happen? Things like that. So there's a lot of issues just related with employing people. You also have to be sensitive to differences in culture, employee expectations, work culture. So, for example, in the U.S., we see a very common trend nowadays about unlimited vacation. Well, you go to Europe, you can't do that. Vacations are by contract. All of the benefits that you're providing to the employee are by contract, and so you don't have a 2-page offer letter. You have maybe a 15-page contract with an employee that has been written by your lawyer, or we can help with that, and reviewed by the employee's lawyer. Very, very common practice. Everybody's used to doing that. And you present them a 2-page offer letter from the U.S., you generally are going to fall flat on your face, because they will know that you don't know enough about the local country, the local requirements, and so then they turn into taking advantage of you. Obviously, there are infrastructure issues like leases, office leases, that kind of stuff. Establishing a bank account, which can become a pain point. Who's the authorized signer on it, things like that. And obviously, expense reports aren't quite as simple as, here's my expense report, pay me my $1,000 or £1,000 or euros. It is more complicated because of VAT issues, and we'll get into a little bit more again a little bit later. But the expenses that the employees are incurring and the VAT they're paying on it is recapturable. So, at 20-25% rate of VAT, if you don't do the right things and don't capture it properly, you may be losing a lot of money for no reason at all. So these are just some of the very high-level perspective on HR and employment issues. But talking a little bit more about employment issues, Susanna, next slide, please. So I talked about how employment in Europe is a contract. What that also means is that at-will employment, which we are all used to in this country, does not exist. There is no at-will employment almost anywhere in the world. It is all by contract, and that's why lawyers are involved in it. Over and above that, as you grow your teams in various countries, there's the concept of works council or collective bargaining agreements. So works council is a very popular term in France, and as you get above 10 employees, you are going to have to establish that. And by the way, you are paying taxes to the French government, and the French government is then funding the Works Council. So you in fact are funding the Works Council indirectly, and they can become a big thorn on your side depending on what you're trying to achieve at a future date in terms of reduction in force and things like that. In some of the countries like Finland, Sweden, collective bargaining agreements are very common. In fact, in some of these countries, it is easier to have a collective bargaining agreement, so you don't have to negotiate everything with each employee. What you're doing is you're negotiating with the union, and then all of the employees are just following that. And it's a very common standard practice in many countries. There are working time regulations, so you have to comply with those, because here we are very used to working long hours and weekends and whatnot. And a lot of successful people across the globe do the same thing. Working time regulations or not, but as you go lower in the organization, the working time regulations apply a lot more, and you have to be careful that you don't violate those. Generally, hiring and exiting is a process. It is not just a matter of your employment contract. And let's assume that it is a standard template, and the candidate is used to seeing it and stuff. You're used to using it. There may still be a lot of processes around hiring and exiting. In fact, exiting is much more complicated in many of the countries, and even a country like UK, which looks very much like the US, rules have gotten tough over the past few years, and you can't just walk up to somebody and say, hey, today's your last day, here's your final paycheck, and leave. That is generally a 90-day or a longer cycle. If there's a collective bargaining agreement or a works council, you will need to present your case to them with all the details and why and what and all kinds of stuff. They have to agree with you, bless it, and that's the only time you can do it. When I was a CFO, we had about 300 people in France, and we were going to lay off about, I think, 70 or 80 people. It took us about 9 months to do that, from the date the U.S. board approved the RIF plan to the actual execution was about 9 months. And there are follow-on consequences. We went out and did an acquisition about 4 months after we did the RIF, and the Works Council came back and said, oh, you are acquiring companies and hiring people elsewhere while you're laying off people in France. So what you need to do is you need to rehire these people that now actually haven't worked for you for 3-4 months, and bring them back on your payroll. So those issues are things that we're not used to here, and these are some of the gotchas in some of these countries. And also, the exit plans here, the RIFs are really based upon more like seniority. So if you have a VP title, you get a month. If you're a director, you get 2 weeks, whatever those might be, depending on what the company is going through. in many countries, there's a lot of other factors over and above seniority, marital status, number of children, those kind of things, which you say, okay, what do I have to do with somebody who has 10 children? Should I not hire them, or should I hire only people without any kids? But those are real challenges that you will face if you end up having to do an exit of, in particular, a RIF, a larger amount of people being laid off. Obviously, in these countries, in most countries, socialist as well as otherwise, there are what are considered statutory benefits. So, for example, in UK, by law, every employer has to provide a pension scheme, and it's called a pension scheme. Very similar in a lot of respects to our 401k plans, but and originally only larger companies provided that. Then they changed the laws over a graduated period of time, where now every employer has to provide, even if you have one employee. And then, so that means you have to engage with a pension provider who can actually put a scheme in place, a plan in place, and then you have to, as you process payroll, you have to make the deductions and contributions and all that stuff and things. And in some cases, if you don't have a local bank account, which is possible, still possible to do business in a country without having a local bank account, it can create other logistics problems. Obviously, statutory benefits provide a certain level of benefit, but a lot of employers are looking for what are considered supplemental benefits, which means that you may have a higher of medical benefits, dental benefits, higher level of life insurance, things like that, over and above what is governed by the statute. And so you not only need to know what is customary in that country, but you also need to know what is customary to your industry, to your location. London is a little bit different than, say, some of the suburbs or further out inland, and being in Paris is very different than being in Lyon, as an example. So to be a competitive employer, you have to think about these things, which you may or may not be used to. And yes, there are companies that do these surveys and sell the surveys, but you do want to partner up with somebody who can actually provide you this information real time and help you get there. Because even after you say, okay, we'll provide you, say, 5x your life insurance, you still have to go out and purchase that plan through somebody's local provider and put it in place. So those are some of the other challenges you face under the employment law. And obviously there's the staffing need. How do you find the right talent? How do you bring them on your payroll? And what is the cost of finding the talent? Can you find somebody on a temporary basis because somebody is on some extended period of leave? How do you work those things? So staffing is a challenge, both from attracting and retaining, but also from the basic concept of finding. How do you find these people, and then how do you put them on your payroll? And a lot of these other issues that I talked about play into it. Talking about accounting considerations, so again, in a lot of respects, your key filings and deadlines are very similar to the US. So, you know, you obviously have monthly payroll, you have to pay taxes, you have to file deposit them on time with the government, and you also have to file monthly, quarterly reports, Form 941s, 940s, those kind of things, comparable information. But from a payroll, strictly from a payroll perspective, there are reporting requirements every time you hire somebody and every time you somebody leaves, not necessarily fired. Even if they leave of their free will, there are reporting requirements to the government. And in a country like UK, you have to issue sort of the equivalent of a W-2. And so when you hire that person, you're asking for the W-2 from the prior employer, and then when they leave, you give them an equivalent of a W-2 so they can take it to their next employer. There are requirements for income taxes, VAT returns, those kind of things, and VAT depends on the volume of transactions, starts off a lot of times annual requirements, goes to quarterly as volumes go up, and can go down to monthly depending on your volumes. Obviously, the larger your operations, the more frequent the filing requirement. the reason I talk about payroll is we all understand, obviously we have to pay every employee that works for the company, but what you're seeing a challenge is that even though primarily Western Europe is part of the EU, one unit, one currency, a lot of everything, very similar rules governing all of that, but payroll is unique to every country, and you have to comply with the local requirements. For example, in France, every single tax that is levied on payroll has to be tracked in the general ledger in a separate account. So here we call all payroll taxes as payroll taxes in one bucket, and nobody really cares what it is till it is within the thresholds you're expecting it. In France, you have to track it by type. So you can add up 7-8 accounts to track all of those 7-8 different types of payroll taxes that you have to pay. Obviously, you have the management accounts issue. So you're running a business. You need monthly information, if not more frequently, on some of the operational issues. Information to be able to manage your business, whether it's a headcount report or a expense report or a sales bookings, that kind of information. You need to have systems and people and processes in place to not only track it, but track it accurately and be able to report it to the to the parent company. I talked about the statutory accounts earlier, statutory audits, which are generally an annual requirement, but in many countries from France all the way to Turkey, as an example, there is a requirement to do monthly reporting. What can be considered statutory reporting, because you are reporting under the local GAAP, the local laws, and what you're having to report has to add up to your 12-month number at the end of the year and all that stuff. So there are a lot of compliance requirements, statutory requirements, which is why a lot of times what happens is people end up keeping 2 sets of books, one local set, one GAAP or US set. So from a public company reporting perspective here in the US, you have good quarterly data that complies with US GAAP, and you can report that. From a local perspective, you're either applying the international standards or some version of it as it is interpreted and applied locally, and you are doing some reporting. A lot of times when you just have a sales office with a few salespeople in the country, those differences might be nominal at best, and so you can just keep 1 set of books, and they're de minimis, so you don't need to worry about making adjustments on a monthly basis between GAAP and local. But as you start selling and doing other things in the country, as your operations grow, these differences can become more and significant. Obviously, there's corporate taxes and payroll taxes. We talked about that. And then the stock transactions. So we all understand the stock business here in the U.S., ESPPs, RSUs, stock options, taxability of those and things like that. And a lot of times the rules as they are applied locally are different. So you may have to worry about that a little bit in terms of making sure that you are complying with the local law. And before we move on to the next one, can we do the next poll, please?
Of course, Ragu. The next poll I'm just about to launch, it will be, how familiar are you with that? Okay, so how familiar are you with that? Extremely familiar, moderately, somewhat, slightly, or not at all? We are having some results coming through here. I'll give you a few more minutes just to, or a few more moments just to answer. Okay, we have the results. 13% are extremely familiar, 20% moderately, 29% somewhat familiar, 24% slightly, and 13% not at all. Thank you very much for those. I will close the poll.
So as you go on to the next slide, it seems like a little over 50% of the people, attendees, are not very familiar with VAT. VAT is what is called an input and an output tax. So you have to pay the tax on everything you buy, and you have to charge VAT on everything you sell. And what you do is, as a business, everything that you're charging your customers, you're collecting and paying to the government, and everything that you are paying to your vendors in your purchasing cycles, you're going to capture that and deduct it from the amounts you owe the government. Now, depending on which way the numbers go, you obviously either get a refund or you pay the government. And the VAT rules are being constantly modified. For example, in Europe now, the online companies do not have to charge VAT for say a gaming company, but now what they're saying is that if your buyer, if your consumer of your service is based in that jurisdiction, you have to collect and remit to the government VAT on say $10 a month or whatever that might be, the monthly fees, something like that. Now, VAT is something obviously we are not used to it because we don't have VAT in this country, but the closest we come to it is Canada, where there's the GST, PST, HST, all kinds of alphabet soup of tax. So as you go into the new country, into Western Europe, you have to make sure that you understand the consequences because you have to start capturing it. And I mentioned that when we were talking about expense reports, that the expense reports have to be analyzed to capture the VAT. And in a lot of cases, systems like Concur and stuff are set up to capture that up front so the employee can input it properly and it can capture it. But you need to understand the consequences of VAT and be able to track and report it properly. So VAT obligations apply to you and your client both, because non-collection or non-payment is really not an option. Local businesses are used to paying VAT, so if you send them an invoice and it does not have VAT, they will call you on it. If you send them with the wrong rate, and generally speaking, these are national rates, it varies from country to country, but if you send them with the wrong rate, or for example, if your VAT number is not on your invoice, they will not pay it, they will not pay your invoice. In fact, that's a big problem because it is impacting your cash flow. Obviously, some of the U.S. companies, what they do is because they need a logistics hub, they may establish a location in Netherlands, as an example, because all the large contract manufacturers have operations there, so you're capitalizing on their warehouse to import and all that stuff, even though the goods may be manufactured, say, in China or someplace, India. But then you bring them to Netherlands and ship it locally within EU. Now, depending on how you're set up, one of our clients had this situation where the U.S. company was the importer of record, so they were paying all this VAT that was being charged, and then they could file for a refund and collect from the government, which is fine, excepting what was happening is when they did their first filing, and the government owed them about half a million euros. The government said, they sent them a letter in Dutch saying, oh, we need more explanation, we need to understand what's going on before we can write you a check. Now, nobody here in the company read Dutch and stuff and things, so they created problems where they had to engage with somebody like ourselves to help them get a refund. So as you file your first refund returns, you may have other problems with it. So storage, operations of goods, I mean, these are things that can create permanent establishment without really you being aware that you are creating a permanent establishment in a country, and this flows into sort of that export issues and things like that, where you have a central hub for bringing in your goods. Obviously, VAT has compliance issues, and the biggest point I want to make here is that in many of these countries, if you don't pay your VAT tax, the government, Inland Revenue or the government can show up and arrest you as a director. Additionally, what happens is in some of these countries is if you don't file a return, they'll make their own assessment and they'll start charging penalties and interest on it. So that creates problems where you now owe the government money, and the way EU is structured, you may owe it to the government of UK, but you land in Italy and you may be arrested or what have you because you owe the government of UK, an EU country, some money on a VAT issues, even though it's not valid. But now you're arrested and you got a problem. So moving on to the last slide on my section, expect the unexpected. So acquisitions are much more complicated. In the US, you can do an acquisition and we can reset everybody's bar to say start again. In Europe, they are grandfathered into whatever benefits, whatever seniority, all of that stuff they had with their prior company, prior employer. So you can't just get out of it because you acquired the employees. We talked about VAT compliance penalties, so non-filing penalties. Do your homework. Do some research, talk to people. There's economic development bureaus of a lot of these countries. Even in the US, they have offices. You can reach out to them. You can get information from them. You can understand how to do business in a particular country, get visibility into it before you walk in. Obviously, there are control issues. Where are you going to manage these operations from? As your business grows, you may appoint an EMEA head. Before that, you may country head. Do you want to keep it local, meaning you're in 10 different countries in Europe? Do you want to have some level of management in every country? We talked about the EMEA head, or do you want to just control it from the US? Which makes it very hard because at least they are 8 hours ahead from California and maybe more. And so depending on where you are based and where they are based, so you got to worry about communications and managing. There are a lot of commonalities between the various EU countries. There's plenty differences. So whatever you may have learned in Sweden, you can just go apply it in Denmark. It may work, may not work. And the governments are much more connected than the US government is, so things pop up much faster than they do in the US issues, challenges. Localization, you heard about some of the website localization, but localization is a broader concept. I mean, you have to think about language issues. So in a lot of these countries, because the language is not English, you're required to do bilingual contracts, whether it's with the employees or customers or vendors. Are you prepared for that? What is your ability to speak, read, write, execute in German as an example, side by side with English? You need to get that right help put in place, structure put in place. And obviously headquarters support. Just because you have a country manager in UK doesn't mean he's self-sufficient and he can run his own business. It is not his own business. It is a business of the US company as a branch, so to speak. So you need to make sure that you have full control over it and you're providing the right support. So Michael, I think there's another poll coming up.
Yes, thank you, Ragu. I will launch the last of the 4 polls. Here we go. What other regions are you considering or already doing business in? So we have a list here: China and or India, rest of the APC, Latin America, South America, or Eastern Bloc. Give you a moment or two to answer this one. We've actually got relatively even spread so far. Right, the numbers are beginning to stabilize. Just a couple more seconds and then I'll start reading them out. Okay, it looks like most people have voted. We have 58% who say China and or India, 63% rest of APAC, 39% saying Latin America, 45% saying South America, and 29% saying the Eastern Bloc. So that's the answer for that one. Thank you very much. I'll close the poll.
So Michael, I think at this point I am finished with my presentation. I think we're going to turn it over to Susanna or yourself.
Yes, thank you, Ragu, very much. That was really interesting to listen to, and very sort of a top level down of very concise and informative information that you gave us. Thank you for that. It does also drive home the point that, you know, exporting and going international is a complicated business, and one needs good partners like Global Upside. So that's that came clear. From our side, we, you know, still look and assume. I mean, all of our assumptions are basically that the company has the right product or service and is ready for export. So all those questions about sort of pricing and regulatory issues have already been sorted or are in the process of being sorted. So we're much more sort of attuned to saying sort of, okay, now how do your customers find you? How do you actually do that marketing and sales? How do you get the visibility, the credibility, the market access that you need to actually do the business once you've actually set up and are ready to engage in the market? And for us, the key tool that you need in your toolkit is these localized websites, which are just very pragmatic and allow you to have that footprint that you need in today's markets. You know, it's clear everybody now looks at people's websites and judges even a brand or a company's relevance through its website. I was reading the other day that you know, B2B e-commerce is well over $2 trillion a year at the moment. And I just want to leave you with a last slide as well. I found this one. It's impossible to look at all the names on this thing, but it just gives you an idea of the growth in companies who go straight to online business. These are the so-called unicorns. You know, with over $1 billion valuation. And again, this comes from the World Economic Forum in January 2016. So, you know, you can see that in the very beginning, these, you know, Airbnb, whatever, they started up in July 2011, it took them sort of some years. But now you can get valuations, you know, that are very, very high. And a lot of these companies, you know, it's all about they start their very DNA has export, global, and online. So with that, I want to just turn over and see if we have any time left for some questions. Michael, has anyone put in any questions?
We have lots of questions, but very little time. So I'll start by just having a couple of questions, and then we'll see if we'll add some more to that. So Ragu, I'm going to ask you the first question. Does having contractors in a country create permanent establishment?
Yeah, so you know what is interesting is when you hire a contractor, from a U.S. perspective, you're thinking he's a contractor and, you know, it's an arm's length transaction, but that contractor actually looks at himself as an employee. So to the extent you're keeping him on your, so to speak, payroll, it's no big deal. But at some point, if there's a termination of this relationship, he is going to go complain to somebody that his social taxes were not paid and things and stuff like that. I came at it from a payroll perspective. But if he's thinking of himself like an employee, you bet that that's a permanent establishment. So, and a lot of these countries, people aren't used to working as a contractor, so they don't think about that way. They don't have 5 clients. They don't have multiple jobs. They don't work at their own pace. A lot of this is governed by the U.S. company, and so it does create a permanent establishment. And by the way, on a logistics note, we are going to compile these questions that we have received, and it will be available with the slide deck as it goes out on Friday. So if you run out of time, it's not the end.
Okay, great. I'll ask you the second question, Ragu, and then I'll ask one for Susanna. So the second question is, multi-country payroll is a big challenge. How do you handle it?
So a little bit of it depends on how many people you have in each jurisdiction, in each country. Because if you have 1 or 2 people in each country, it is very hard to bring a system in place because systems cost a lot of money. But as your headcount grows in particular countries or across many countries, then there are options to bring in systems which we can help introduce. We're not a system provider, we're actually agnostic to systems, but we can help bring systems provider to the table that can help you use an HRIS/payroll combined system that you can benefit from. But every payroll is different.
They need an expert to talk to. Great. Susanna, I will ask you the third question. Do I need a localized website for each export market?
Well, ideally, I would say yes. Every market that's worth it deserves its own website. But I guess in a real world, we really do need to prioritize. I mean, look at Europe. Taking Europe as a case in point, it's got 28 countries within the EU, at least at the moment. But that includes places like Luxembourg. There's 300,000 people, population of for Luxembourg. So does that really need its own website? Probably not. We also do a lot of work about spheres of influence. If you look at Germany, for example, that's 80 million people, but in terms of who speaks German, it's much larger because there's parts of Switzerland, Austria, even parts of the Czech Republic speak German, parts of Poland. So in fact, we look at sort of big spheres and that and say, if you have a German website, that's 80 million plus, we calculate about another good 20, 25 million. So we really recommend that people just make a priority, and obviously the 3 big countries, the 3 big economies are the ones that make up over 50% of EU GDP. That's Britain, France, and Germany. That's 50% of the population, 50% of the GDP. So that's probably your first priority. Thank you, Michael.
Great. We have lots of questions still coming through. They will be answered after the webinar. We will follow up with everyone. I'll make the next one the last question. Ragu, back to yourself. Do any countries require bilingual contracts?
A lot of countries require bilingual contracts. France, Germany, and think about it this way, any country where, so UK is a great example. It is an English-speaking country. France is a great example of it. The national language is French, it's not English. They require bilingual contracts. And Spain, I mean, I would say a lot of countries require bilingual contracts. Depending on where you're going, it is easy to figure it out.
Great. Thank you, Ragu. Thank you both very much for the presentation, and a lot of information was covered there in great detail. Just to remind you, the webinar will be available on Friday. It will be sent out to all participants, and also it is one of a series of webinars that we're running. Please do go and visit ibtpartners.com, and if you look under resources, you'll find a list of upcoming webinars and also recordings from previous ones. We will launch the final survey to get your feedback. Please do spend a moment just filling that out. We do appreciate that. And thank you very much again. Happy exporting to everyone.
Thank you, Michael. Thank you, Ragu. That was very interesting. And thank you to all the exporters who attended.
Thanks. Bye.
Bye-bye.
Thank you. Bye-bye.